The Foreigner is Steven Seagal's big comeback movie where he finally gave his fans what they wanted the most.
Schoolgirls.
What the f***? No! God damn it! You know what? It's shit. It's just complete shit.
Vincenzo's Go Crypto Investing, and that intro is essentially what's going on in the cryptocurrency and blockchain technology field. As old Vincenzo's been telling you, we've been in this bear market, and we entered it in about April of 2021, and we're still in it now in the early stages of 2023. And old Vincenzo tried to warn you about all of this, how to it, sidestep, and audible, the criminal gangsters, and people that really wanted to hedge inflation, really wanted to preserve wealth, and really wanted to hold what they had and not lose it in inflation or all the other stock market and assets going down. I've been telling you it's about the gold and silver bullion. And that's why my channel is called Vincenzo's. And notice what's first: gold and crypto investing. Vincenzo's Gold, which essentially means Vincenzo's gold investing, right? And then we sprinkle in some crypto, and the gold obviously means silvers and precious metals, right? But we emphasize, we didn't put it Vincenzo's crypto gold investing. One, it sounds like ass just saying it out loud, Vincenzo's crypto gold, but that would emphasize a crypto investing more than a gold investing. Old Vincenzo is gold crypto investing because I believe in preserving your wealth. You buy physical gold, right? To preserve what you have for future purchasing power that you can even gain substantially during certain economic and fiscal events, right? But it always seems to hold its value at the very least. So the same thing you could buy in 1900, you can still buy or have a little bit more of it 100 years later versus you're losing 99% if you just sat in fiat and didn't turn it into some sort of asset, right? But you can see where we've been in gold. And as Fiscal and Monetary Policy Monday, the video is getting up a little bit late today. But we're going to look at that in this video and a little bit of XRP at the end. So my XRP audience, somewhere in the middle or end of this, we'll get into that and give you a little update. But you can see what we've been talking about here with the gold. And here's why I'm very bullish, not just from the monetary and fiscal policy side of things being very ultimately bullish, but the chart. The chart is very bullish. Or it's very bullish, and or you could say it's a double top. You can see just like Bitcoin, then you came down, then you came up, and now you got this consolidation. But this is when you had this huge run up in the financial crisis of the mid 2000s that stemmed from decades of nonsense by the federal government, right? But you can see you had that huge run up in 2011 in August, conveniently enough. If you fast forward 10 years later, we peaked in August. But you can see we had the cup and now the handle. This is a macro pattern that is one of the most bullish macro patterns you can get. You can see the big cup being formed there. You see the cup, right? And then the handle. And that is where you're attempting to break out of 11-year or 13-year cup and handle, right? And now you're been in the handle phase. And look, we haven't moved these. When you came up, you hit resistance, support, resistance, came back up to the neckline, which is up here, right? And got harshly rejected. And you fell right back down to the lower support just below the 200-day in the weekly time frame. But you bounced a few times over the course of a few weeks to a month, right there on our lower support, and you've catapulted a nice rally ever since with our industry exclusive measuring tool. And you can see what we got going on here. We've had a phenomenal 18% return, and from its all-time high, we're slightly below it. So you can see gold over everything in 2022. The crypto lost 60 to 99% in some cases. The major cryptos lost about 75%. A lot of lending platforms went belly up and filed Chapter 11, and you lost your money. Gold is essentially even since we had that big run up during COVID. It's traded sideways, a nice consolidation, right? All the risk assets besides the major indexes, individual stocks, Tesla, Apple, Microsoft, all that kind of stuff, all the risky meme tradings are down 40 to 60%, and the meme coins are down in some cases 99%. But here's how you do a cup and handle. You got your first run up, your second run up, your necklines right here. And you go from the bottom to the neckline, right, to get to a point of a breakout. And you bring it right to your neckline, and that's how you get your targeted move. And that's how we have a target way up here at about 3,400 $169.69, and that's a massive move. And that would take probably it would be a bull market. It would take quite a while, but that's a 75% move. And I think that target eventually will get met. This consolidation, like gold likes to do, it likes to make big move up or big move down. Like big move down, long consolidation, big move up, long consolidation, big move up, long consolidation. It likes to do these long consolidations. Hey, we're on break right now. We'll let you in about 10 minutes. No, our guys are on break right now. We'll let you in about 10 minutes. Okay? So that's what gold likes to do. It likes to have big moves followed by long consolidations to kind of draw people out of the market. But if this breaks to the upside, this is your upper end potential on a targeted move, a nearly 75% increase in gold, right? If you break bullish out of this over a decade long cup and handle, and you can see that, see how that plays out. And notice every time gold has a big move, long consolidation, big move, long consolidation, big move, long consolidation. But they always have big crashes. Look how long that one lasted. This one lasted from its peak in 78 after the hyperinflation nearly to 2001 when the financial crisis happened. Then you had the big rally, long consolidation, big pump, long consolidation. So that's what gold does. But that's what I'm looking at in the macro time frame in gold. And that's why I'm very bullish, not counting just the technicals, the monetary and fiscal policy, and the state of the world's overall economics and inflation. The chart is very bullish along with everything else, and that makes me even more bullish. And if you want to hold your and preserve your wealth, you buy the physical silver and gold bullion. And if you want to get rich, you buy the mining stocks, right? And usually the miners follow the metal. You can see silver. I put this beautiful chart together a long time ago. You can see in about 1972, silver was at about $1.31. Then we had a huge run up, right? See this big run up off support going through the mid 70s during the big inflation. Then we had a long consolidation. And then towards 1980, when Ronald Reagan and inflation got out of control, we had a massive run up. And in 1980, we hit $50 an ounce of silver. Then we drove the price down with a long bear market consolidation that went just like gold till about 2001. And we bounced once in 92 at $3. We bounced once in about 2003 down here at about $4. But notice down here in 72, we bottomed at support at 136. And then in 1992, 20 years later, we bottomed at support again, but at $3 and change. So we made about 100% higher between the two lows. And then a few years later, much shorter, but about 10 years later, we bottom and we're at 419, a solid dollar over where we were before. That's about a 30% higher. Then we have a massive bull run during the financial crisis, and we hit again in 2011, a nice double top there in silver and quickly reversed. But notice when we bottomed so far this time, we bottomed in about 2020, right about somewhere we dipped down, I think to $9. Yeah, $9 back in here in 2008. And then we wicked down during COVID to about 13 or 12 right here. Where were we at? At about 11. So you can notice the step pattern up. $1.31 is your low, $3 is your low, $4.19 is your low, right? Then about $9 is your low. That was stemming from back here. And then our most recent low here, we hit about $12.69, right? It's funny, it ended up there. So you notice we constantly are gaining on a big, every time we have a big crash, we consistently are higher, right? After our first crash, we crashed 44%, right? Then we crashed again after our massive bull run, finally from our bull run high at 50 to our low, 92%. But 92% from our old low to our new low was still 158% higher, right? And then after we had another big crash in 2011, where we were nearly $50 again, and we crashed all the way down to about $9, that was a 77% flush. But from our old swing low, the last time we tested support, that was a phenomenal 166.69% higher than our last swing low, right? And that's still our bottom from the bear market after here. So you see why I'm so bullish on silver. And now we know gold bullion was in a head and shoulders topping reversal pattern. This is looking like in the macro time frame, a textbook ascending triangle where you have horizontal support or resistance and uptrending support, and it forms a duck's beak, but you have uptrending support and then an area that's the same overhead resistance, and then it's going to be wide open at the beginning, and then it tightens up at the end. And these are bullish consolidations. They don't have to break bullish, but they usually do, just like the pattern gold's in. And this gives you a chart pattern. And the way you would do a technical target out of this is you would go from the bottom of the move to the top of the move, right at the widest part where it started, to the point of a breakout. Well, that's too, my chart's not adding up here. Hold on. I don't have it set right. It's not going to readjust. So I'm going to go more like in here, the mid ground. It's supposed to readjust this for percentages, but it's not doing it. But that would give you a $500 silver price. I'm not forecasting that. I think where we're going on to this move is over here, between 62 and 94 over the next decade. And that would be a huge return, right? You have a big spike up again, and then you come down and you start consolidating and eventually hit over here. And then you're back at $20 when the last time you were at 12. Now you're at 20. I think that chart showing us there's going to be a massive move in the gold and silver bullion based on not only the monetary and fiscal policies of this country and the world and central banks around the world, but the chart itself. Just like the XRP, the chart itself is very bearish over the long term with intermittent bull runs, right? But I think we're going to have lower and lower highs. Conversely, the opposite of what I think gold and silver bullion are doing right now and have been doing. But you can see we ran up into the moving averages, got chopped down. Volume still going down. And now I think we're on an inroads to 37 cents. And that's your major pivot move. Can you pivot and hold? And then you could fire up here to 50 cents. Or you're going to get on there, come up, and then you're going to flush, end up down to 32, maybe come back up and use it as resistance, come back down to the bottom part at 29, right? It looks something like this. Very simple, right? You always got to try to predict what these market manipulators are going to do, but I could see it coming down, coming up, getting rejected, coming below it, getting supported at 32, now using 37 as resistance, and crashing through 32 to the bottom part of this uh, volume indicator, come back up into here, and then get rejected, and then you have your huge flush. You could do something like that, so we'll leave that on there. Your bullish area, as you come, you dance around, you get supported, and you pump up to the upside, right? Something like that. That's how you get bullish. That's how you get bearish. And we still have that. Obviously, it didn't hit it in 2022, but we came pretty damn close. We're still going to end up hitting that 18 to 20 cent target, and I do have a bear market a bear market bottom sometime in 2023. I think it's going to capitulate in 2023, and it's going to be somewhere, I think, around June or July, around 2.5 to 9 cents. Peace and love.